Hey, everybody, welcome to another Funded Trader interview. I am Dan Hodson with TopStep, and today I'm sitting down with one of our funded traders. You might recognize him.
Yeah.
You've probably seen an email with his face on it or his signature on the bottom. He's done a couple videos with us. CBO and founder of TopStep, Michael Patak. Thanks for sitting down with me.
Hey, Danny. What's up?
Nothing. So I don't know if a lot of our users know you are actually one of our funded traders, basically the original funded trader with TopStep. You've been extremely active these last 5 or 6 months since the market really got volatile. So today I kind of want to sit down, talk about that, talk about some of the approach you've taken. I know your style. I know what you're looking to do. And it's been working. I mean, you pulled out 8 grand just about a week ago off of one trade. So let's talk about it. How have you approached trading these last few months?
You said I'm active. I'd say I'd be an active observer more than I've been an active trader, which to me is the sniper or picking your spots type of conditioning I've learned in the history of trading. I think in the early days I was an active trader because I was actively trading. Now I'm an active observer, and I will pick my positions and pick my times. So yeah, I've been watching it because the volatility's been quite extreme. The markets are what a lot of people would say completely out of whack right now, but are they out of whack, or are the markets where they should be? So that's all the big question. But either way, with the big sell-off in March and then the rally that's kind of ensued after that, it's been a really interesting time. And I almost feel like it's the same time as the Great Recession, the 2008 year, of how the markets moved. And then after 2008, October was a big sell-off. And then you had March of 2009, I believe, where it just started rallying and never looked back. So
Right.
that was, it's very exciting right now. And the markets are moving. I have them as in the corner of my eye always. So that's what's going on. And I've been checking in on my phone. And like I said, I'm not, you mentioned the trade last week. It was a 1 or 2 lot, and I risked, I always only risk $500 on a trade. Sure, I could go more, but why? I like to have tight risk, and I like to have, take advantage of big moves, and I'm looking for those. So I'm not scalping. I'm not holding things for weeks, but I may do all day long trade or a couple day trade.
Absolutely. You mentioned something really interesting. You're an active observer. And I think that's what happens with a lot of traders in this industry. As you kind of start to develop and learn the markets and learn your style, we start to recognize there's more opportunity and less trades. Mm-hmm. You're taking managed risk, but you're looking at those A setups. And I think that's something a lot of traders start to develop over time. I think I'm in that same position now myself. I'm not taking 10 trades in a day, 3 or 4 maybe in a week is a big week. And I think that helps grow these accounts.
Yeah, I think that's exactly true. And Hoagland and you talk about, there's these extreme when it's trading on the extremes of the ranges, and like I said with the volatility, when it gets to these the market's sitting in channels, and every now and then it'll pop out of it, and there's a play or there's information it's telling you. So those are very that's why you observe, and then strike when it fits with your setup.
Absolutely. So something that's really interesting to me is how people get into this industry. Everyone comes from different worlds. I come from Chicago. I grew up on the Board of Trade. You come from the farms of Nebraska. Yeah. How the heck did you find Chicago Mercantile Exchange, Chicago Board of Trade? What brought you there?
Probably failure. I mean, I probably would have stayed in Nebraska trading if I was finding success. I wanted to professionalize my passion. Started trading in Nebraska in 98, 97, 98, 99. And then, blew out of my $30,000 accounts by 2001. I think, after September 11th was when I got my margin call and the markets opened back up a week later. That was painful. And then, took a break and moved to Chicago and wanted to keep pursuing it in a different fashion, trading somebody else's capital, learning from a different lens, and that's what brought me to Chicago.
Yeah, I mean, that's what we have to do. We go through these ebbs and flows. We got to learn about our style. It's very easy to hop online, find a strategy that someone says works for them. How's it going to work for me? You got to start to kind of develop your own style. Bringing in different ways of looking at the market.
Exactly.
Trading's such an interesting world. Everyone can approach it so differently. So you've been at this now well over 20 years. You've been an active trader for a really long time. What are some of the things that trading has provided you? Because I think that's a huge thing that we all approach this is we want to have trading provide stuff for ourselves. And sometimes a lot of us are working towards those. You've been at this for a while. So what's it provided you at this point?
I always look at trading like a professional athlete. It's not going to be there typically your entire life. Why? Because it takes a ton of focus. You're always got to be in tune with the markets, in tune with your body, and I'm can do analogy between sports and whatever. You got to be caught up with the curve as the sport changes, and you call it baseball, football, soccer, whatever. There's new athletes that come in that play the game a little bit differently and things like that. So trading to me is you get in, you manage your risk, you pull money out, and you park it somewhere. Where are you parking it? That's kind of the decisions. That's up to you. Now, I've seen people, and you've been on the Board of Trade floor, the Chicago Mercantile floor, and we've seen people park it in money pits. Call it boats, call it cars, call it lifestyle. I've never really parked it there. I always parked it in real estate. I never liked real estate because it takes up and absorbs a lot of cash. But
yeah.
as you know, and we've seen, real estate's always been a great spot to park money. So I parked it in real estate, a lot of Chicago real estate, and then, parking that there, renting those places out. Now you got a new source of income. Now it takes some pressure off you as far as how much you need to provide or pull out of the market. And when you start getting that pressure off of yourself of, hey, I need to do this, I need to do that in the markets, then you actually start trading better. It's funny how much you can really start to produce or perform, or how better you can perform in your life when you don't really need it.
Absolutely. Well, you bring up a good point.
That's just, you're completely financially free. But it's like, as you start pulling money out of the markets, there would be times where in my early days, if I pull money out of the markets, and then I'd park it into, I bought a condo, now I paid off a condo. And then pull money out of the markets, and I would buy a new condo with, and then you're like, that was the real estate play. So I wasn't a boat guy, I wasn't a car guy, I wasn't an anything guy, and I'm still continuing to do that right now.
Absolutely. Well, you bring up a great point. Trading is not always going to be fruitful year after year after year. It's constantly flowing. We're going to have good years. We're going to have bad years. And finding ways to create second forms of income is really important. We've talked about that in a lot of the segments we've done here. I think Mick's talked about it in the past, where he was car detailing while he was trading just to create some extra cash flow. And as you made that point, you started to create a cash flow with real estate. Then that takes the pressure off of trading, because trading doesn't have to provide every little penny you need to survive each and every month.
I should have gone to the early days. I bartended to offset that, and then I moved away from bartending, trading full time, and then I'd peel money out of the markets and then go real estate. So I didn't go trading real estate. Bartending, service industry.
Built it up a little bit.
Yeah, built it up a little bit. And then, that was my primary income. And then trading became my primary income. And then I knew, okay, every time I fell asleep or went on vacation, I didn't get paid. So how do I create a business or have other revenue streams, income streams or whatever you want to call it, come into your life? And, that's just adapting to other opportunities in your life. So, so that's how I go back to the early days. That's how it started.
Right. And that's how you build up wealth. You want to have your money create money for yourself.
Yes.
That's how you have to grow over time. So I want to just touch on a couple last things before we sign off here. First off, you've been active. We're trading now. You mentioned $8,000. What are some of the things you're looking at just to get into these trades?
What am I looking at? Well, I have a flexible bias right now. My flexible bias is basically, flexible bias means you have a bias, but it's flexible. I have a strong opinion that's weakly held. That's another reason. I like trading with that. You listen to the markets, but there's a certain way in which you say, like right now, I'd rather be more short than I would be long. So I'm the plays that I would be more interested in. I can miss the long setups because I'm in a bias, flexible bias. I won't get convicted in that and keep a short on until it has to go my direction. Those days are gone. The markets can be irrational longer than you can be solvent. So, stay flexible in all your decisions when you're trading, and have your stops or your daily loss limits or whatever it may be. So right now I'm just looking at from the short side. I'm watching the SPUs, S&P. I have the NASDAQ next to that. And, I watch the Dow too, but I used to trade the Dow a lot more. But I'm just watching the S&Ps. I like where it's at right now. I think there'll be something that's going to trigger another sell-off. I think things are a little bit out of whack, but I'm not forcing that. I'm looking for, I've heard John say it multiple times, fading the extremes or whatever. When we get up to the highs and we get these rip higher with light news, yet there's just more and more global and local, negative data coming out of and whatnot. I'm waiting to for those spots to get short.
Awesome. And I want to point out something. Michael and I talk a lot about our trading. We're both telling each other what we're doing a lot of times. Yesterday, I think at one point I said I was long, he was short, and I know we both ended up profitable on the day. So I think that's one of the coolest things about trading is we can all talk about the same stuff. We can be looking at very similar things, have a different position on, and we can still both make money.
Yeah. I mean, yesterday it was just a one lot, and I sit here and work, and then corner of my eye I'm doing this, and I had about a 9 handle profit target and a 5 handle, so I'm risking $250. It was on the highs of the day. It just got short, and it took I believe $450 or $500 out of the market yesterday. It's $500, and it's a one lot. I'm not a full-time trader, so my positions are going to stay light, my activity is going to stay light, and my observation is going to stay the same.
Absolutely. And that's how you start to create this profitability over time. It's growing that account little by little, chipping away. $500 is a great trading profitable day.
And today, I didn't trade today. I don't like it, and that's the great thing about having either other revenue streams or income streams or a hobby or whatever, is so then you don't feel like you always have to trade. Over trading, Danny, that, and you've been a coach for quite a long time. Over trading absolutely killed your month, your week, your year, your focus, your discipline, all that.
Right. The one thing I was always told was don't ever let one day, one trade determine your outcome as a trader. So you can't let that one bad day take you down. So how do you control that? Just like you said, you're taking $500 loss limits on a day.
Remember, guys, in the pit that we would say, because in the pits we would always talk about the pits because people speak out loud. You can hear, people would be like, "Well, there goes 2 weeks." It's just because they let their discipline slip that day, and they know they can pretty much do in a week or two on average, and whatever they did that day that slipped, and then they go throw their hands, and you don't know what they did, but that what they did was bad enough that it's going to take 2 weeks of you're going to have winning and losing days, but they know their average, 2 weeks of work to make back that. So that's, that gets painful.
Absolutely. That's why we set these risk management rules in place, and we trade around them. So,
that's why
all right, you're
so important.
Absolutely. So you're in Chicago, you're in the office now. How long are you going to be around for?
I'm going to be here till about August 9th, and then I'm heading out to the mountains again. Got a place out there that am going to get some Top Step team out there, some funded traders out there eventually and whatnot, and they can come enjoy the mountains, because I think having a little retreat or a little getaway would be nice for just about anybody, especially in this COVID environment. In Chicago, there's not too much to do right now due to everything's not open. So might as well go enjoy Mother Nature.
Absolutely. You can kind of see the trees reflecting off the Jersey in the
Oh, I see
background.
those,
That's where I've been since the whole thing started. It creates a positive mentality with
yes.
everything going on.
Detached and digital, and but I will probably always have the markets. I do not have a screen like this at the house, but yeah, I'll be watching them.
Outstanding. Well, Michael, thank you for sitting down with me. I really appreciate it. Any last words of advice for anyone listening?
Trade well, trade smart, and always trade for tomorrow.
Perfect. Thank you very much. I appreciate it.
All right, take care, Danny.
Take care.